under equity mutual funds itself, there are different varieties of mutual fund which suits your different objectives. Who has to take mutual PMS? Say, take an example, an investor who is sizable. In PMS, it is dual kind of that. So if a fund manager buys some stock and he sells within 1 year, if you are a sizable investor, a portion of your money can go to PMS, but
we have been guiding clients to invest in mutual funds, and I have a lot of clients who are investing in mutual funds for more than 10 years, 15 years, right? And like any other thing, you get a little bored when it comes to investing, and they want something exciting, right? And
something new.
Yes, and more return, because you have seen that ad of Maruti. The first thing, mutual fund itna deta hai, wo kitna deta hai. So they want, they go reverse way. How much more I can earn?
Yes.
And that brings a topic where they don't have time to do stock trading themselves. They would have tried it, but they realize their career is paying them better. Right. And there is a product called Portfolio Management Services, PMS. Right. So who should look at PMS? Second, should they even look at PMS, or can it be avoided? Is it really a good product or a bad product? Whatever.
Correct. PMS is definitely a good product. Every financial product is good, but you should know whether it suits you or not. That's very important. See, today what happens is mutual fund is there everywhere. So lot of people are getting bored. It is not something new. So it is just like everyone talks mutual fund because they have made money or they want to make money. So it is a one topic that everyone discuss.
Correct.
Beauty of mutual fund is the way even PMS is regulated, but mutual funds are highly regulated, cost sensitive, tax efficient, and there are plethora of product under equity mutual funds itself. There are different varieties of mutual fund which suits your different objectives. And most important is because of that size, their expense ratio is very low. So a fund about 20,000 crores today, AUM, the charges are what? 1.25, 1.5 kind of that. An investor who can invest as low as 5,000, who don't know the nitty-gritties of the stock market, he can make sizable money or good rate of returns on his investment because expense ratio is low, highly regulated, and the fund managers are accountable for their actions.
Absolutely.
Right? Now, who has to take mutual PMS? Say, take an example, an investor who is sizable. With an example, I will tell you. Because for PMS, the minimum investment is 50 lakhs, right? And an investor who is today who want to invest, say, 2 crore rupees. On 2 crore, 50 lakhs is what percentage?
It is
25%. So he is investing around 25% of his total investable surplus in one single product. Concentrated risk. Right? And with this new budget, what happens? Short-term capital gain is 20%. Long-term capital gain is 12.5%. So in mutual funds, if the fund manager buys, sells, whatever he does to give you the best returns by depending on the market dynamics, no need for you to pay the tax as an investor.
Mutual fund enjoy
that. Only when you redeem whatever is the tax liability, you have to pay that. Capital gain tax. Less than 1 year, 20%, more than 1 year, 12.5%. In PMS, it is dual kind of that. So if a fund manager buys some stock and he sells within 1 year, the tax liability comes on your PAN, it's on your headache.
Because the stocks are in
your name, in your demat. Even though he is taking the decision, tax is on your head. So short term 20, long term 12.5, whenever they trade, right, on which you don't have any control, because he will do it for your good interest only. Because he has taken a fees. He has to give you good returns. If not, he will not give him additional money. We are not doubting any of those things. But it is a dual tax kind of that. There you will pay tax. Say over a period of time, either you will come out of that PMS or you want to withdraw a portion from that particular PMS for any of your requirement. Then once again, you have to pay the tax. Once again, long-term capital gain tax or short-term capital gain tax.
Depending on when the stocks were bought, long-term or
short-term, you have to pay the tax. So one has to be careful there. So 2 things I covered here. One, you should be a sizable investor. If your total investable surplus for long-term if it is less than 5 crores, if you are going for a PMS, I don't think it's a good idea, because even at 5 crores, 50 lakhs is 10%.
Correct.
So too much of concentration.
Correct.
But if you're a sizable investor, then definitely 1 or 2 PMSs can be there in your portfolio. But with this kind of tax thing should be there in your mind. And once upon a time, majority of the PMSs are concentrated. Today, many of the PMSs are also having 40, 50, 60 stocks, just like mutual funds, because they are also getting a lot of money thanks to their marketing, thanks to market.
Correct.
Everything contributed. So it is not necessary that that FOMO, that I don't have PMS with me, I don't have AIF with me, it is not required.
Correct.
If you see last 15-year returns, if you remove few patches, I think the returns that a PMS gave or the returns that a mutual fund gave is almost plus or minus nearby. But there are some patches. Take an example, 2017, 18 kind of that few stocks rally happened. That growth concept rally happened.
Yes.
And during that time, PMSs have given huge returns. Markets have seen that. But by seeing those returns, a lot of people have came. Now you have to see if you see their portfolio in 2022-23, those products were highly underperforming. You understand? It's a cycle. Reverse to mean has to happen.
Okay.
It's science. So have a proper plan. If you are a sizable investor, a portion of your money can go to PMS, but you can't conclude that if I don't have PMS or a AIF, I will not make money. No.
Okay.
Mutual fund is a boring product. For all practical reasons, Pratik, making money from money by investing itself is a boring job.
Correct.
Because here nothing happens as you want or as you wish.
Yes.
You are specialized in your domain. You have a control on your domain. You do changes, tweaks as per the requirements, dynamics. But here, you are a spectator to the spectacular.
Yes.
Patience space, it is boring. Accept that it is boring. Live with it. I will add one last sentence. Gold. You are buying and you are holding it for pretty long period.
Generations.
Generations. Real estate, if you are buying a site, you just travel entire Bangalore.
Yes.
Empty sites are the places where dengue takes its birth. Right? So you will hold it for long time.
Correct.
But when this equity mutual funds, PMS comes, you have the tendency to see what is happening. Market upar jayega, niche jayega.
Daily
So many
valuation.
reasons. Yeah, you will do that. Come out of that. Have a proper plan. Invest with a proper time horizon. Have a vision. Respect the fact that this country is a good country to be. Volatility is a part of life. In the long term, you will make money from money by investing in capital market.
Because the economy is growing.
It's growing. Absolutely.
Yes. And one small question, because you mentioned the fact that people with 5 crores of investable surplus. So a lot of people are heavy on real estate. So it makes them, say they have bought it sometime and their total net worth is 20 crores, 30 crores. But majority is in real estate.
Valuation.
So when you say that investable surplus, so you are talking only about the financial products, right?
Products, yeah. Ideally, if he's, say, take an example, an investor will say 20 crores portfolio. In that 20 crores, if it is 15 crores is one property, okay, then he is carrying more risk for himself.
Same concentration risk.
Yeah, concentration risk.
Or it can be even the overseas stocks due to the ESOPs.
Whatever it is. Lot of portfolios you have, it is good for them to work with an advisor or a mutual fund distributor, take their help.
Reduce that concentration.
Understand that you are in this life cycle. Sometimes that stock may do well, may not do well. If you really go back and see many of the stocks, it may be India or US, few stocks have not moved for 5, 6, 7 years. But your expenses will not stop. Whatever money you have to spend at particular life stage, you have to spend.
Yes.
So planning is a must, sir.
If you have liked our video, please don't forget to subscribe to our channel and hit the bell icon. In case you want us to answer any of your questions, don't forget to mention it in the comments. Thank you.